Trading without a stop loss is the fastest way to end your trading career. When I started trading 5 years ago, I thought my stop loss was holding me back. I would either blame the banks for hunting my stop loss or just say that the market is against me because it would always hit my stop loss and then just go the other way, and I felt like I was being left in the dust. Fast forward to today, I have managed to perfect my stop loss and put it in a place that's logical and can keep you protected most of the time. Stop loss placement is one of the most important topics because not only does it adjust how much you earn per trade, it also protects you from loss as well as allows you to know when you're wrong or when you're right in a trade, which is extremely important when trading a strategy. So today I'm going to break down my exact stop loss placement strategy, where I place my stop losses when taking trades, and why this works so well. So if you find that interesting, definitely stick around. Let's get straight into the video, and if you enjoy it, you can leave a subscribe at the end. Let's get into it and let's go. Alright guys, so first thing I'm going to explain, how do we actually place stop loss on what is stop loss based on. So stop loss wants to be based on where your trade is literally wrong. So if we take a very simple example of price going towards the upside in an uptrend, in order for price to break towards a downtrend, we would have to break previous structure, right? That's a previous low. So that wouldn't be a bad place to put stop loss because that's essentially where it's wrong in this scenario. The hard thing is we want to try optimize for something called risk to reward, meaning we want, let's say we're looking for a buy, we want the trade to move up in the least amount of space possible in order for us to achieve the most profit. And the way we're going to do that is obviously the smallest stop. If it moves up a little, you're already at how much you risk. So if we take a ratio of 1 to 1, meaning that for every $1 we risk, we get a return of 1, or for every $10 you get a return of 10. Then obviously if we had a tiny stop here, then our 1 to 1 would be very easy to achieve. But what would happen is we would end up hitting stops more often because it's too tight. So we need to find that perfect balance of where it makes enough sense and where we can still optimize for risk to reward to make sure that we're not trying to ask the market to give us a massive move just so we get paid. Okay, so how are we going to do that? And this is what I'm going to get into now. So we have two options. And I'm going to draw this. The first option we have is that we want to be putting stop loss always below candles or structure. So what do I mean? So let me draw you a candle and let me draw you a structure. So in this scenario, we have a candle and a structure. We want to put our stop loss either below a candle, meaning at the lows of the candle, or in this type of scenario, we want to put it below a structure. So those are the two most common places to put stop loss. Putting a stop loss midway through a candle, and this is talking about your entry time frame candle. So for me, it's going to be the 15-minute time frame. That's the most time frame I'm using to find my entries. Putting your stop loss here middle of the candle is not going to work because there's nothing protecting our stop loss. So when it comes to stop loss placement, it's all about protection. What is protecting your stop loss to lose? So once you understand, you can put your stop loss below a candle, or you can put your stop loss below a structure. So I want to delete this one, this candle, and I want to focus on this diagram I've drawn here, and I want to show you this in detail. And what we're going to do here is we're actually going to add some more candles saying that price has come from a little bit of a move up here, and this is the move we're taking. So let's say in today's scenario, we were taking a buy here, okay? This is all going to start to make sense, so make sure you stick around. And if you're enjoying it, leave a subscribe and like. Getting the likes up to 500 for now would be appreciated. Shows me you guys like it. In this scenario here, we would look for a buy. My confirmation for buy, I have so many videos on how I take trades. You can go to check that out on my channel. Would be a close above here. Stop loss can either go below the candle or below the structure. So I'm going to ask you guys watching the video right now, which stop loss you think would be, where would you want to run stop loss? Would you want to run it below the candle or below the structure? So I'm going to give you guys about 3 seconds. All right, your 3 seconds are up. That's all you get. So in this scenario, the right answer would be below the candle. But why? Okay, I think a lot of you would have said maybe below the structure because that's the safest place. Yes, it is the safest place. But look at the difference here, right? If I just go back and adjust that to where it was, 0.62 is our risk to reward. If I move stop loss below the candle, suddenly it becomes a 1 to 1 immediately. Such a big difference, right? And the reason why it's okay is because we have a level of protection. This previous structure is going to act as protection now, because if the next candle pops up and starts to fail, this level that we closed above can act as support. Just like this, previous resistance can become support. So I'm using this level as a level 1 P, level 1 protection, okay? Below here would be level 2 protection, but that's only if we don't really trust the trade overall and we need extra protection. Then we can have second level of protection. But here we have level 1 protection, meaning that if price comes back before it hits my stop loss, it has an area to protect. And technically, it has to respect this low if it wants to continue up, just like it was doing back here. We're going to go into some live examples showing you. I will just go to a random chart and show you some nice examples of how this works. Okay, so we have something protecting our stop loss. Now, even better inside this candle, now this gets a little bit advanced. We actually just did a webinar in my exclusive group talking about these more in depth. I'm doing a part 1 or part 2, but I decided to bring you some of the content onto YouTube as well, because you know I love to support. But the guys in there, we were speaking about lower time frame structure, how to even get your stop loss tighter, and we're putting that in the webinar. It ended up being like a 35-minute webinar, so a lot more in depth, but I'm going to keep this short as possible and put the good information you need. So in this case, you get away with putting it below the candle because we have this, and if inside this candle was some structure on the time frame below, so let's say this was a 30-minute and there was a structure on the 15, or this was a 15 in this scenario and there was structure on the 5, that's even double protection, because now you have structure on even lower time frame, right? So that's just going to further help you and your stop loss placement. Okay, so when's the time where we can't put it below the candle and we need structure? Well, let's say, and I'm gonna remove some of this stuff here, let's say we had something like this and price was closing above, but the level it was closing above was maybe from like 3 days ago. Maybe this was the bearish candles 3 days ago, and it was all the way back here, and then today we're closing above here. And today we've had quite a few candles push up here, right? And this is where people go wrong. Actually, I want to draw it a little bit different because I want to show you a way you can actually. So I want to draw that candle there, and we have something like this. So technically, this is considered a structure because we pull back, close bearish. If you look at this on a 5-minute, it would probably look most likely something like that. So that's a structure point, right? A structure point just means a bullish and bearish candle close, or a bearish and bullish candle close in a bearish example. So they're structural points. So in this scenario here, if you're taking this buy, putting stop loss below this candle here, it's going to be a big problem because you have nothing protecting your stop. Yes, you have the previous level, but it's super old, 3 days ago, right? So it's okay to buy, but we don't know. Price could come back all the way to here and end up coming up. You be stopped out and you're like, damn. And then this is where people say breakout trades don't work. Continuation trades don't work. Yeah, because they're getting stopped out because they don't understand market positioning and how liquidity works and how you need pullbacks to continue up. So in this case scenario, you need to put it on the next structure. So we could get more advanced. Let me know in the comments if you want the more advanced stuff. But my point is here is that you could even look for lower time frame structure inside of this candle to then use a smaller stop loss. Like we can do, first of all, is getting the correct stop loss. Okay. The second step is getting the optimal stop loss. So you want your stop losses to be correct to begin with, and then you want to optimize them, right? So first of all, just put the safer stop losses because you just want to be correct in your trade. Even if you're earning less, hitting break even more, it's fine. But then we want to optimize for stop loss and be like, okay, there's times where I can use this same stop loss in the same position. But here, where stop loss has to go is below that previous structure there, right? Below the structural point that was made. Yes, it's making the trade bigger, but this is what you have to deal with because this is our level of protection here. See this box? This is our level of protection. If price comes back, look where it retested. Retest into this previous structure and you will still be protected, okay? And most likely if something closes below here, you are going to be wrong. And remember, we want to put stop loss where the trade is basically wrong. Just a bearish candle closing like this does not necessarily mean, I want to make this a little bit clear, so I'm going to remove some of these drawings. But just a bearish candle closing does not mean that your trade is wrong. Like, let me ask you, if you take this and the candle closes like that, does it mean the trade is wrong? No, because what we could see is we could see something like this. And then the next candle start to do this. Yes, you have to sit to drawdown, but that's okay. You would have survived it, but with the stop loss below the candle, you wouldn't have survived it. And then this becomes a better entry, but you didn't know that back then, right? You didn't know that price was going to create structure. So that's my point. So hopefully this makes sense on how to start to play stop loss. I do want to go through some live examples and keep this video short. So I'm going to try find some live examples just from scrolling on a random chart right now. This is just GJ. So in this case scenario, here's your previous structure. Where's stop loss going? If you're taking a buy with the close, below the candle because it's below structure, right? So that's one example, below the structure, that's your stop loss, and you targeting the next resistance. Let's go back, and if we see we can get a continuation trade. I'd like to show you a bearish example so you change your mindset as well. So let's find when price was going down. This would be an okay one. Again, structure, one candle bullish, next candle bearish. If you're taking a close below like this, this is some random stuff. Boom, you can see stop loss goes above there. You would watch this zone here. What is it going above? The structure. So it's naturally there. This is a perfect one. So this one here, I love this example here. This is a great example. This is one we just discussed. So in this case, most people, where you're going to put stop loss? Below the structure. Although fine, we can optimize and actually put stop loss below the candle. Why? Because we have this structural point here before our stop loss gets hit. So if price was to retrace, it will tap this first and then continue. I have this to protect my stop loss. I can optimize my stop loss, and you see how much that optimizes your risk to reward there as well. So that's a kind of an introduction to optimization of your stop loss placement. Same thing here. We have a level to protect. So if we're looking for buys above this level, now this is an interesting one, no bottom wick on this candle. Sometimes price likes to make the bottom wick. When there isn't bottom wick, check out my no bottom wick video. I explain that concept. So that's what happened here. I want to see an example of where stop loss would have failed even if you did everything correct. Because most people don't really show that. They only show the successful side. See, the cool thing is like all of these failed, right? For whatever reason. This one closed above, broke the high, your stop loss would have been hit. But the good thing is what we're seeing is the whole trade failed. It didn't continue up. It's not like your stop loss was hit, then it continued. That's what you don't want to see. Like when you're wrong, you want to be fully wrong. Here you were fully wrong. Price just went down. Same thing here. When this closed above here, break the high, your stop loss would be below the lows. Look what happened. Came down, ended up reversing for the day. So you were fully wrong. That's a positive thing because that's showing that I gave it a shot. There was something else. My stop loss was not the matter here. It wasn't the problem. Okay. So these are all positive things. So hopefully these examples have helped. I encourage you to check out my stream journal. These are all trades I've taken live on stream. I do post as well my stop losses. So you can see where my stop losses are. In this case, let's have a look at this trade here. Yeah, what we discussed, close above, stop loss was below the lows of the previous candle. So you can see some of these trades if you want to see some stop loss placement, and that's pretty much it. So hopefully you guys enjoyed this video. If you did, let me know in the comments. Leave a like before you leave, and take care, trade sharp, and hopefully catch you guys very, very soon. All right, peace.